proud privilege to welcome on stage Team SBI, the credit team from SBI, from the local head office. And we are proud that State Bank of India, the largest bank in India, and maybe even the world, I'm not too sure about that, but they are with us now and they have been helping us learn about the banking aspects. And one of the, this is not relevant to the topic that is going to be presented, but one of the topics that I learned from the GM was, and Ashok sir also guiding me in this, is about automation of banking practices. Meaning currently what we do in our hospitals, we were initially writing checks, and then we were giving an Excel file, sending it to the bank. But now the banking team was telling me that it's possible to do everything online. So probably because we have limited time, we'll keep it to 10 minutes, but we'll have a Zoom session or classes later, or I request SBI to provide us videos that we can share in our groups, because we got 5-6 WhatsApp groups with tremendous reach. Our QPMBA page is around 1,000 views now. I would request all of you to log into our Facebook page, facebook.com/QPMPA, and give us more reach that all our videos that we present here can reach more and more people. A warm welcome to Credit Team SBI. Please take over the stage.
Good morning all. I am Sandeep Bey. I am Chief Manager of the SME branch of State Bank of India at Trivandrum. At the outset, I would like to thank SP family headed by our Dr. Ashokan sir and Dr. Devin, Prabhakar and all the QPMPA fraternity for having us invited to this conference and giving us an opportunity to address such an august audience. Our presentation is intended to give a brief outlook about the financial sectors, funding requirements, how the banks can support the funding requirements of the hospitals and clinics, and how best banks can support in the growth of the health sector in Kerala. So, we all know that the health sector will be one of the most complex business sectors to enter into. First reason may be because of the people who are being, you need to have knowledgeable and skilled workforce to be employed, along with a good infrastructure to support it. And another thing you want to have is you'll be dealing with different people from the different status of the society. And you will be dealing, each and every doctor and each and every hospital and clinics will be dealing in them in day in, day out. And we'll be having, unlike other services industry, you'll be dealing with human body, wherein the chances of errors, the margin of error will be very less. So in considering all this, the contribution of hospitals to the health sector of Kerala is very immense. And banks as a whole, and SBI in particular, is very happy to support the health sector of Kerala and support the banks, hospitals. Yesterday's, I had the privilege to hear a lot of sessions yesterday, and one of the major things which were discussed yesterday was the closure of some of the small and medium hospitals in Kerala and the gradual entry of the big corporate hospitals in Kerala. Depending upon the point of view, there may be different reasons. People might have different opinions about that. But one thing what we think is that the change in health sector in Kerala is not limited to the health sector itself. You can see, if you see the entire business industry, you can see the changes are happening, like from small jewelries, the shift is gradually happening to big jewelries in Kerala. The small theaters, film theaters are closing and the shift is happening to the multiplexes. And even we can see large supermarkets coming up in every nook and corner of Kerala. So in such a scenario, what could be the reason of such a shift is what we'll be thinking about, why this shift is happening. And the people, nowadays the people are becoming more and more aspirational, and they are asking for more and better experiences, which from what is happening today. So we can see that the people are trying to change, trying to have better experiences from what they are having now, and the shift from the small and medium hospitals to the large hospitals is part of this shift on. So market disruption, which used to happen once in decades, are now happening multiple times in in a single decade, thanks to the rapid change in the technology. We can all see that the changes what artificial intelligence is bringing in various business sectors of the business sectors across business sectors. In such a scenario, what should be the small and medium hospitals should do? Whether we should continue to do the same thing, or shall we think that what we are doing good now, the business is going good, and we can continue to be good, and gradually we can see that the business might be shifting to some other big hospitals in Kerala. Or whether large hospitals might think that they have the best infrastructure and continue to rely on that infrastructure and think that nobody can match this infrastructure in near future. So what we think is that constant update of technology, infrastructure, facility and services will help any hospital, big or small, to stay in tune with the changing market requirement and will make it ready for any competition in the market. This is where the banks come into the picture. So every hospital might not be able to put the required amount of funds for improving their infrastructure, for purchasing new machinery, and might require loans or the support of the banks for doing it. Even if some of the hospitals or some of the promoters have own funds for improving the infrastructure, at some point of time, a letter of credit or an LC might have to be established if a supplier demands it, and that has to be arranged through a bank only. So in multiple ways, banks can support the infrastructural requirement and the working capital or funding requirements of the hospitals or clinics or small and medium hospitals, large hospitals, big corporates. Everybody, banks can be able to support everybody in the health sector of Kerala. In Kerala in particular and India as a whole also. So in this discussion about the shifting of business from small and medium hospitals to large hospitals, what we think is that smart planning can help the small and medium hospitals also to thrive in this business and to grow along with, and all the small, medium, large and big hospitals can together survive and grow in this medical field of Kerala. Now, actually, we'll discuss on our industry scenario of which has been brought out by the research department of State Bank of India. So current market size of the Indian medical industry is estimated to be $11 billion, and with a CAGR of compounded annual growth rate of around 15% over the last 3 years, and it has the potential to reach around 50 billion in 2030. The hospital industry in Kerala, in India, is accounting for 80% of the total healthcare market and is witnessing a huge investor support. And we can see even the small and medium hospitals in Kerala, because we have been interacting with a lot of entrepreneurs, hospital entrepreneurs, even in Trivandrum, and I have been seeing that even small hospitals, there is a potential demand from even from the portfolio of FPIs, institutional investors, as well as individual investors for investing in their projects. So the hospital industry is expected to reach at $132 billion by 2023, and from $61.8 billion in 2017, and again a CAGR of around 16 to 17%. In 2020, India's medical tourism market was estimated to be worth at $5 to $6 billion, and is expected to double to around $13 billion by 2026. So there is an immense scope in medical tourism sector also. The diagnostic industry in India is currently valued at $4 billion. The share of organized sector is almost 25% in this segment, with 15% for labs and 10% for radiology departments. India is a preferred destination for medical value travel, where patients from all over the globe come to heal in India, and is growing as huge opportunity area in the healthcare market. So the snapshot of the industry scenario is the huge potential in the Indian medical industry, which is growing at a very healthy annual growth rate of 15%, and the increase in medical tourism, prospects of medical tourism and medical value travel. some growth drivers which has been pointed out by our research department is one is the robotic automation process automation, RPA, which will improve the efficiency of healthcare workforce, reducing cost and creating value proposition. We all know that running a hospital is a costly business, considering the thing that you have to employ knowledgeable and skilled workforce and have to retain them over a period of time, and experienced for retaining an experienced skilled worker, skilled professional, in fact, will be costly for each and every hospital. So robotic process in long term has the potential to reduce the cost of each and every hospital, and we know that many hospitals even in Trivandrum has started this robotic process automation. Shifting of disease burden. Non-communicable diseases account for 50% of the disease burden and 60% of all the deaths in India. The policy support and measures. Now 100% FDI is allowed in greenfield and brownfield projects. Measures to correct unfavorable duty structure are also being taken, and single window clearance is also being allowed by the government of India. Atmanirbhar Bharat Abhiyan, or self-reliant India. A special economic and comprehensive package of around 20 lakh crore was given for promoting the manufacturing, indigenous manufacturing in India. Insurance coverage. Now we all know that penetration of insurance is very less, at meager at 20% in India. So with the vast population of around 80% of people being not covered by insurance, so the immense potential or the future potential of medical care is one of the major growth drivers for the future potential will be the higher potential of insurance, medical insurance in particular. Emergence of telemedicine. Along with this, the emergence of telemedicine and government initiative like e-health, along with the tax benefits and incentives, are also will also drive the healthcare in India. Medical infrastructure is around $200 billion is expected to be spent on the medical infrastructure in India by 2024. So now we all have seen what is the potential available for the medical industry in India. So how we can tap the growth and how the banks can support in this growth of medical services and in the hospitals is what we are going to look at. SBI is currently having a exposure of more than 11,000 crores to different hospitals in India. During the last financial year itself, our bank SBI has sanctioned more than 250 crores of loan for different hospitals in Trivandrum district itself. This amount has gone for establishing new hospitals, expansion of new hospitals, purchase of new machineries, and even for taking over of high-cost debts of different hospitals. So this amount has been deployed at different parts of the district and has immensely contributed to the medical health system of this district. And even now, the different branches of State Bank of India in the district are processing loan proposals worth 150 crores. Again for setting up of new hospitals, again for expansions, taking acquisitions, etc. So this is the brief crux of where SBI is and in funding the medical infrastructure. So what are the funding solutions available for the hospitals? So generally there are two types of funding requirements of the hospital. One is short-term requirements for their meeting the operational requirements, and another is the long-term requirements which is used for setting up of the infrastructure. So working capital requirements can be met by cash credit or overdraft, which is usually, which we all know, which can be used for meeting the working capital, operational expenses of the hospital, paying for salary, rent, power bills, etc. And can also be utilized as a cushion for delayed receivables. We all know the ECGSS and CGSS receivables might take a lot of time, even 8 to 10 months to get realized. And for meeting this liquidity cash flow gap, this working capital funds can be utilized so that whenever the funds come, meanwhile all the operational expenses can be met through this working capital requirements. And for purchase of new machinery, for purchase of land, purchase of setting up of building, purchase of machinery and expansion, acquisition, everything you can rely on banks by availing term loans. And for import of machinery, for purchase of machinery, you can have letter of credits. If the supplier is insisting on letter of credits, you can open letter of credits at the banks. And we can also have term loans denominated in foreign currency, like USD or Euro, wherein at times the interest rates will be lesser than lesser than the rupee loans. And for staff, other than these loan requirements, bank can support staffs by opening corporate salary accounts. A corporate salary account has multiple features for the employees in particular, because there is no minimum balance stipulation in these accounts, and these accounts come up with a insurance package, along with they will have the option to avail different types of loans like personal loans or housing loans from State Bank of India. And the other thing, support what banks can give, SBI in particular can give, is the collection mechanism. Like yesterday session, our regional manager has told that, while addressing the gathering, has told that if you see that there are three major activities that is going on in a hospital. One is the treatment of patients, second is the administration of the hospital, and third is regarding the payment and collection mechanism. So the payment of fees and the patient fees and all the payment and collection mechanism can be taken over by the branches through our cash management portal, our cash collection mechanism, our e-collect initiatives, so that the efforts of the promoters or the doctors can be much better channelized and utilized for the growth of hospitals. So these are some of the products which SBI offers. I'll just quickly go through it. One is a flexi loan. This loan can be is utilized for general purpose, which is you can use it for. Earlier I told that cash credit is for purchase of stock and term loan is for building infrastructure. Flexi loan is a combination of both. You can either use it for purchase of stocks, or you can use it for acquisition of land and building. And you can construct or upgrade or renovate the offices or hospital. You can purchase machinery. You can even use it as a stopgap arrangement for improving your liquidity in the system. And you can pay off the long-term debts or deposits using it. Second is an asset-backed loan. An asset-backed loan is a loan which is being given against the security of another property. Say you have a property worth 10 crores, and then asset-backed loan can be taken by mortgaging that property of 10 crores, and you can take 60% of value of that building, and that amount can be utilized for acquiring the fixed assets or current assets, which are utilized in the operations. So in this way, your primary security of hospitals or the assets which are created out of this finance need not be hypothecated or mortgaged with the bank. Only the mortgage will be restricted to a third-party collateral or third-party security, means in this case another property, and the funds will be utilized in the business. So the assets which are created or which are in the business need not be hypothecated or mortgaged if we are availing this facility. Next is healthcare business loan, which is a tailor-made loan for the medical sector in particular, which is to finance qualified medical practitioners for setting up new clinics, for purchasing medical equipments and ancillary equipments, and for setting up hospitals. It can also be funded for expansion or renovation or modernization, and the facility can either be a term loan and as a cash credit, and the maximum funding which is available is up to 20 crores. The major feature in this thing, normally in term loans the banks insist for 25% margin, while in this product the term loans the margin need be only 15%. So if there is a requirement of 1 crore, only 15 lakhs should need to be brought in by the promoters. Another facility which can be offered is an open term loan, wherein normally when we sanction a term loan, it will be for a specified purpose, like what all machineries are you going to purchase, or what is the total cost of construction for if you are going to construct a building, or if you are going to acquire a building, what is the total cost. But this open term loan is it can be used. We will be sanctioning an amount which can be utilized for any purpose. You can either use a part of it for construction of building, part of it for purchase of machinery, part of it for acquisition of new assets also. So it is very flexible in the sense that you will have a loan amount sanctioned, and then you can go for planning for acquisition or purchase or expansion, whatever is required for improving your business. So maximum quantum of finance in this case is restricted to 8 crores. Another feature, another facility which we can provide is an SME car loan, wherein the car loan can be availed in the name of the hospital or the company itself, and the company can claim depreciation of this car loan. Depreciation on the car can be charged in the balance sheet, P&L, and the tax can be saved to that extent. So now we have seen what all products what the bank can give. So now how we will be able to how can we plan on going? How can we plan on expanding the business? So first of all, the thing is that we should be able to identify our requirements. So in case of small and medium, if you take an example of a small and medium hospital, so you have a vacant land nearby, or you want to expand the business through adding more beds. So if that is the requirement, if you want to purchase land, you will have to construct a building, and you will have to purchase the machinery and install it. So first of all, thing is that you will have to arrive at a project cost encompassing all the project requirements, all the costs what will be involved in it, including the cost of land, what is the cost of constructing the building, purchasing the machinery. And in this, while arriving at the project cost, it should be very carefully arrived in such a sense that we will be thinking that a machinery is costing 1 lakh. We know that we can bargain and reduce it maybe to 80,000. So if we put this 80,000 as a project cost, and we are unable to bargain it to that level, and if the cost goes up to 85,000, then the project cost also slightly goes up. So while preparing a project cost, we should go about conservatively, and we'll have to include all the expected project cost in the project. And one important thing which has to be included in the project cost is the provision for contingency. Normally 10% provision for contingency is included in the project cost, so that during the course of construction, if any cost escalation happens, that can also be taken care in the project. So the project cost is the most important thing to be arrived at while thinking about expanding. And based on the project cost, any bank can fund 75% of the project, maximum, normally up to 75% of the project cost, while 25% of the project cost should be brought in as margin by the promoters. So I think the time's up. So we would like to thank once again for the opportunity provided, and we will be of assistance. And we have 2 stalls in this premise. One is in this venue itself, and one is in second down floor. So if you have any other further queries, please contact us. We will be available this stall, sir. Thank you, sir.